Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Hope all is good with you and you're having a great day. I'm actually, we're financial advisors here at Jazz Wealth. If you ever come by the office, we have a mullet office. It's official in the front and it's a party in the back there. So this is the party area, and the official side over there, we kind of all work in the same room. I changed my mind today, Cody. I'm no longer going to work in there. I'm moving over there. Yeah. I spent the other day in that other office, and I was like, this is peaceful.
Eric? Was it Eric?
It was definitely Eric.
Yeah.
Nice and quiet. What am I, 1,000 feet away from him? So if you come by, you want to visit, hang out, learn a little bit, we'll have our own space now because I'm officially taking over. These people are bothering me all day. Hey, if you want to get your dough straight, check us out at jazzwealth.com. You can schedule a call, chat with us, email us, whatever you like, see if we're a good fit for you. We are a small financial advisor, but with the power, the big power of Goldman Sachs backing us up. So we can do the big boy stuff. We can do the getting your dough straight stuff. We're all here for you. You can also play jazz after, what the heck, with so many names. You could play Guess the Dow. jazzwealth.com/guess the Dow if you want to play there. What I was trying to say was our wine and wealth class last week, which we do for clients, was about kids becoming more independent and the tax things you may want to consider there, some strategies you may want to consider. So maybe check that out if you're interested there. Okay, solidly, the S&P was in the green here today. Obviously, that's a good thing there, which is weird, a little bit unique because Wednesdays, if you didn't know, Wednesdays tend to be one of the down days. So far, year to date, here's each day, the average gain. Mondays are good, Tuesday, Wednesday, not so good. Thursday and Friday is the best performer out there. Fridays, obviously at 0.34% there. It's kind of interesting because Wednesdays this year have only been positive 36% of the time. So you have yourself an oddball kind of a day there, right? Very interesting, and hopefully more of that to come. And by the way, in 2022, which was mostly a down year, Wednesdays were positive 46% of the time. So this year, Wednesdays have been just kind of brutal in terms of being positive, but that's nothing. I mean, last year we're up 46% of the time. So even in a down year, Wednesdays were better than they've been performing this year here so far. So it's all good with that. What do we have, though? We have limited risk. We have cautious risk on here. People want to participate in the breakout, but we just got just a tiny sliver of good news on the debt ceiling thing. So I don't know that I want to bet on the breakout. That's the general sort of sentiment in the market, and understandably so. We've been talking about this here. This area, this high, right about 4,200 being the sort of next wave of the market if we can get over it. It will likely take some kind of significant progress on the debt ceiling deal other than just talking like they've been doing here today, saying, no, we won't default, don't worry. Well, we've heard that before. That's actually been something that was said during the Trump negotiations, during the Obama negotiations, both Bushes actually. And so those comments, they help, right? But it's not like amazing and getting things going to the point where we say, all clear, here we go, we're just taking off. Nonetheless, we have the S&P right where it needs to be. We know the line in the sand and what everybody's looking for there. Briefly, I'll move on over to, there you go. There's the NASDAQ moving towards the upper end of this range here. Sorry about that. I'll draw this line out a little bit tighter for you so you can see. Hopefully it'll stay. And that's the NASDAQ up 24% year to date. And really, the only real mover over the last 3 months, the Russell 2000 was weak, of course, but the Dow, the S&P have done essentially nothing over the last 3 months here. The NASDAQ up now 9%, almost 10%, or getting towards 10% in the last 3 months. What's that tell you? If there's any index that has a chance of becoming overbought, getting a little heavy, right, could be the NASDAQ there. So patience there if you play. I'm calling it a sit on your hands time of the market. And that doesn't mean do anything. It doesn't mean go be defensive, go be in cash, go move your stuff to bonds. It means put your hands under your butt and sit on them. Don't make any transactions. Just kind of sit and wait. We don't have a lot of bad going on, but we don't have anything exciting that's going to propel the market towards highs, aside from the debt ceiling deal, if they're really going to do what they say there. Nonetheless, we'll go over to the NASDAQ. 80% of the index was higher today. Healthcare was the only area that didn't really get going. Biotech healthcare space there. In the S&P, 75% of the index was higher, which is helpful. That's what it takes to get this thing to have a solid wide range day where the close is close to its high of the day. So if you're not familiar with candlesticks, this is the open. That little tick is the low, and then this tick is the high, and this is the close. So a solid, wide-ranging day where we close near highs means there was very little selling at the highs. People were happy to hold, similar to this, similar to this, similar to this. See what we hope we get out of this? If you're not familiar with candlesticks and you're a client, go on into the dojo there and just in our classes section, just search candlesticks. Not really giving you my opinion of them, but like through one by one. What do these things actually mean? What are they telling us, and why are they kind of easier to understand than what you think they are? All right, moving back over here, just breezing through stuff today. The Russell 2000. Finally, a little bounce for the Russell. It's still down. Actually, it went positive today. Year to date, positive 1.38%, thanks to today, actually. Value stocks were where all the excitement was. Small cap value stocks up 3% as a whole here today. 85% of our small cap fund, we manage our own funds here and build them ourselves. 85% of them were positive on the day, and I should say 85% of them gained over 1% on the day. So really, really strong day. Even the regional banks, those guys that have really been struggling, those small cap regional banks like your local banks and things that are public, even they did good. They were the best leaders today. All of a sudden, that bank stuff is just behind us there. So they're still the weakest year to date. So I'm not saying like they're in rally mode or anything there. But that rally today in the Russell was enough to get us back to positive year to date. That's your lagging index. The Dow is technically lagging more, but it's more volatile. The Russell is, in fact, over the last 3 months, the weakest out of the group. If you look at the price of oil, it is trying to bottom out here. Big old bottoming tail there. People like to use that as support or use this area as support. And so this latest pullback that you've seen right in here, that's the reason why people bought that. Anytime you get a significant reversal day, again, in the candlesticks class, you can see that that is the second most powerful candlestick that you can have in terms of reversals. You understand why people bet or are betting that is, in fact, maybe going to be the low. If we look at bonds here, very hard to convince the yields to move lower. So today, a little bit of a drip further down, causing interest rates to go just a tiny bit higher. These are tiny bits, right? The range in the bond market right now is getting back to what it should be, but that is a very slow kind of moving market with an occasional, big day here and there. And that doesn't matter whether you're looking at the long-term bonds, short-term notes. We're looking at the 10-year here in this case, also pulling back towards those lows. What else do we have for you today? All right, stocks in the news. So yesterday I was joking. Home Depot said, softer sales, right? Not as many people, higher ticket count or higher ticket price, but not as many people. Target said the exact same thing, and especially in their digital space, their digital sales down 3.4% there, and they said, we think the sales are going to be a little bit lower this quarter here. We're getting our inventory cleared out. All of that's getting better, but all in all, sales are a little bit softer there. Not good. The big granddaddy of all of them will be tomorrow, with Walmart reporting. Remember, as Walmart goes, so goes the economy. I mean, that's pretty straightforward. TJ Maxx in the news as well. They said, well, I guess we're getting the traffic from Target because we're seeing our traffic increase in our stores there. And they saw so much traffic increase, they said, we're comfortable with raising our guidance for this quarter here. That was helpful for the stock. It was a bit volatile. It's a little bit odd for them. ServiceNow was in the news there. So they just said, you know what we're going to do? We're going to buy back $1.5 billion worth of stock right now. I initially didn't think that was a good idea because they've got some AI issues there that are going to eventually come back to bite them. Maybe that's not the best spending of their money, but it's not my decision. Wix.com. Wix is, in fact, a public company there. So they beat on earnings there, better than expected revenue, raised their guidance going forward, and they raised their guidance for this quarter as well. So they're saying, hey, things are good. People are still building websites, making stuff, selling stuff, getting themselves out there. Everything's not all apps these days, although they are in that app space as well. Constellation Brands. I just thought here's a couple that I just thought were interesting. Stick with me for a second. So the stock was a little higher today. It's hinting at a little bit of a breakout, as well as the next name I'm going to report. They have, in their last earnings report, which wasn't too long ago, they said, what we're going to try to do is we're going to take our Modelo brand and try to get that exposed to people that are non-Hispanic. That's currently their audience for Modelo. They said, we're going to try to branch out just a little bit and try to get those non-Spanish drinkers there. And then they said, well, then when we do that, we're going to go look at Corona, and we're going to try to get the multicultural drinker instead of the average white American. Is exactly what they said there. So they basically reported on that. So they said that during earnings, and they gave us an update here to report on that, and they said, it's going really well. We're actually able to do this, and therefore our margins are higher and our total sales are going to be higher as well. And so that reporting caused that stock to move a little bit higher today. Kind of a off the main page sort of news, really. Colgate. I found this interesting because they said, here's what we've done. Now, this is since their earnings here. Here's what we've done. We've looked at our consumer brands here, and we've essentially raised prices. Now, the way they say that is they say our margins have been improved across all of our aggregate consumer brands. That's a fancy way of saying we raised prices and nobody noticed. Well, that works so well that in a very nice way, and I knew my Fabuloso went up in price, man. It was up like 50 cents. And I know Cody loves his Fabuloso over there. Don't you?
No, I don't think I've ever had a Fabuloso.
No, come on. It's in the office back there.
I actually don't know what it is.
Fabuloso?
Yeah.
The cleaner. That's the cleaner that we use.
Oh,
it smells so great.
The whole good.
Yeah.
Yeah.
Well, anyways, that became more costly there. Colgate owns them. So they have a bunch, and they own Tom's. There's a whole bunch of things they own. They're not just toothpaste. Anyways, they said, well, it's gone so well. We raised prices on all this other stuff. People just absorbed it. Let's go to our pet food brands now. So the Hills brand, Science Diet, they're now going to jack up prices on that. They suspect they'll be able to do good there. Here's the funny part. And someone correct me if I'm wrong. I'm just literally reading this from them. These are not my words, so don't bash me. Don't give me a hard time. They said, again, their words, within Latin America, especially in countries like Brazil, where the category at large and Colgate's market share seems rather mature, in other words, not a lot of organic growth there, management noted potential on improving occasions for toothpaste. And they said specifically, especially brushing at night. In other words, people in Brazil don't brush their teeth at night, is what they're saying. So if we can convince people more to have more occasions where they brush their teeth, especially at night, because they don't brush their teeth at night, we would do better. Is that true? I didn't know that. I don't know if in Brazil you brush your teeth at night or you raise that way. I just thought when I read that, I always look between the lines, and I look between the lines, and I'm like, so more advertising to get people to brush their teeth at night? Is that not a thing over there? Are we not doing that? I have to shower and brush my teeth before I go to bed. I can't sleep well. If you ever see me just exhausted and tired, it's because I didn't shower the night before. For some reason, I just went to bed. See what I mean? We're like transparent advisors. We just tell you how it is, man. You get to know us. Jazz After Dark. Done some great ones here lately. Some specifics revolving around how to get your dough straight. Like, where do you start? There's so many moving parts there. And clear data that shows that you guys are preparing for a recession, whether it happens or not there. And we talked about tax-free dividends that most people don't know are tax-free and how to go about doing that there. All right, I'll take your questions here if we have any questions there. Toothpaste occasions. Yeah, not like a party, like occasion. They say occasions, like how often somebody brushes their teeth. Apparently, there's only one in Brazil. Yeah, shower, brush before bed nightly. It's not a habit. Yeah, you got to do it. Just kind of how I was raised there. That's, but but I don't know. I don't know what everybody's doing out there. PayPal, I think PayPal as a bottom in it. I don't know why we would suspect that that's a bottom. In the short term, you'd expect maybe some traders to come in there, but I don't know why that would be the ultimate bottom in PayPal. I have no inside knowledge, if that's what you're asking there. And WWE. Remember, these guys are going to be called TKO. So them and the UFC have merged, and so this stock will become TKO. I don't know when that deal closes, but it is coming up, I believe. They don't need any kind of approval, but that's what's going on there. Yeah. And Sir Francis says, tax-free dividends. Yes, ETFs where you can actually get tax-free dividends and participate in the market. Remember, not every ETF, when they give you what looks to be a dividend, that's not always a dividend. Sometimes that's just cash coming back to you that's not taxable. Yeah. Recession tip, use a pea-sized glob of toothpaste. You don't need any more than that. All right, Chris. I'm one of those that, like, you know, the brush head is like that long. I just go across the head, you know, just fill it up. Otherwise, why would they make it that long if you're not supposed to fill it up? Why wouldn't they just make it shorter? So, But Chris coming with the tips there. Save you a whole $10 a year. Thank you, sir. Tom says, why have the chips outperformed in the last few days there? Because that's the only good thing going right now. There's the generative AI space is where money is going, whether the economy grows or falls or does whatever. That's the one space where people are saying, that's the future. I want to put money there, and it's just dripping in little by little. It doesn't matter what the debt ceiling thing does. They're like, forget it. I want to be a part of this, and that's what you keep seeing. The number of times you see AI in the media is literally in the thousands per day, like online, not on TV. You can track that. So you can actually see how many times it was mentioned per day and then go look back and stuff. You could use like Google keywords and look to see how many times people researched generative AI or just AI. Off the freaking charts. Yep. Tom says, why would we rally so hard on a debt ceiling agreement if it's known on both sides, no chance of a default? Well, no, that's what they said today. They said, we're not going to default. Don't worry about it. We don't have a deal yet, but we're not going to default. So that is the initial thing, because there was nothing else out there today. No real meaningful economic news that's normally a market mover. So that's what the excitement was about. Why that would cause things. For doing the job you're supposed to do, the markets go higher. But I get it. I know what. How low will oil fall? Talked about that a minute ago. The potential for that bottoming tail to be the bottom. My cost average down. Average cost. Oh, I see what you're saying. Okay, I'm with you now. I'm joining you. So you average down on end phase 158. Average cost is 180. All right, got a little work to do. You're no stranger to a covered call, if I remember, right? Ooh, Dan's got a good point. You look up how many times AI is being mentioned. Well, that's because AI wrote the articles. Ooh. Uh-huh. That is, unfortunately, that is probably pretty accurate comments there. Yep. All right, I will wrap it up here and get on out of your way. You guys enjoy the rest of your day or evening, and thank you for hanging out with us. Thank you for those of you that are trusting us to actually work with you. JazzWealth.com, that's the name. You know where to find us. Have a great day. Adios. Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.